of the panel discussion is the structural challenges of the U.S. economy. Now, in a little over 1 hour discussion, not a lot of time for us to discuss. So our focus would be on the structural change vis-a-vis the international trade. All eyes on the prospect of trade war or the trade adjustments or correction. I want to leave enough time for the floor to ask questions, if any. I'll try to leave some time for questions. Now, what are the key questions on our mind? Now, 3 decades ago, there was a theory called theory of international trade of specialization or separation of labor. Basically, the developing countries producing low-end products exporting to the developing economies, whereas the developing economies are producing higher-end and more sophisticated products exporting to developing countries. So now, because of this kind of a separation of labor or specialization, everybody would have benefits. But 30 years later, today, now, the first part of the story was right. The developing countries, by producing lower-end, for lack of a better word, products, exporting to the advanced countries, especially from the Asian tigers and China, improved their so-called national competitiveness and strength. But the second part of the story, what happened to the advanced economies in this process? Manufacturings were relocated overseas. Many jobs were lost as a result. Sort of the background or the root cause of the populism. President Trump been tweeting left and right about this. So my first question about globalization. Larry Summers was here a couple of days ago. He was also talking about this. Now we have 2 American friends. Maybe they agree with Larry. The term globalization has been abused, not to the benefit of the U.S. Now China becomes sort of the advocate of globalization, whereas the U.S. is the main opposer of globalization. Now, without further ado, in the opening, this is a more interactive session. So starting from Brilliant, Mr. Brilliant.
The first question.
So is the first question,
is globalization still something that's welcome by developed countries, particularly the United States?
Well, first of all, it's a pleasure to be here. The Chamber is the largest business federation in the United States. And let me assure you all that we are strong advocates of open markets, fair and free trade, and we will continue to be strong advocates for fair and free trade.
But that's not what your president says. I mean.
Well, Mr. Chairman, I'm going to have to differ with your views on this.
Okay.
What I would say is this. There is no question that there is a debate going on in our country, in China, in Europe, and around the world about income distribution and gap between the wealthy and the poor. That is fueling some of the debate around globalization. There's also no question that technology is moving so rapidly and changing the way we connect, but it's also changing in ways that is disrupting. Technology is disrupting the traditional workforce. Again, fueling some anxiety in America, in Europe, China, and elsewhere. So it's up to governments working with the private sector to address the questions surrounding where does technology lead us, where does trade lead us, where does government step in and address the income issues, income gap issues. From my perspective, from the Chamber's perspective, trade is a component of the story, but not the only part of the story. There is no question that trade has reduced poverty levels worldwide. China is an example of this. The fact that China has developed export markets has elevated and reduced poverty levels in this country. There's also no question there's more to be done on that front. President Xi Jinping says that poverty reduction in this country is one of the 3 or 4 priorities. So the work is in progress. I think to make the point that the United States does not embrace globalization is just factually wrong. The United States remains one of the most open markets in the world. The United States is improving its regulatory and tax environment. We just passed significant tax reform. We have continued to deregulate the economy in ways that we're stimulating it. We should continue to have stable growth, probably in the area of 2.5%. I'm not sure we're ever going to have sustained growth at the 4% level that President Trump has talked about. But frankly, we don't need 4% growth. We're at historic lows in unemployment, 17 years since we've had unemployment levels like this. So we have the challenges that many countries face in dealing with the impact of technology, the disruption in the workforce. A lot of good comes from that. A lot of social and economic good comes from technology. Don't make any mistake about it. But at the same time, that is contributing to the anxiety in the chairman's question. Trade is a component, but not the overwhelming component.
Not the whole story.
Not the whole story. So I'll leave it at that for now.
Okay. 道奎兄啊，你这个
Now, David, I just listened to your speech a couple of days ago. You said that 10 years later, China will continue to be the leader of globalization. So share with us. I understand globalization. Is it the end of an era? Is the term of globalization should no longer be used? Is that what you trying to ask? Now, this question is really broad. If a big question is posed, we need to give a simple answer, and we need to look at the factors. Now, the biggest factor is market, who's growing the fastest. As a benefit of the globalization is actually steadfastly supporting globalization. The main emerging markets and the biggest developing economies know that globalization benefited them. The most advanced or the earliest industrialized nations, including France and other European countries, also steadfastly support globalization, including the integration of Europe. All these stories tell us that globalization will not be reversed. That is the main trend. There might be some fine-tuning in the details, but the megatrend will not be reversed. And one conclusion is, in 40 years from now, if we look back then, this morning's speech by President Xi Jinping of China might be historic. He said that China will make contribution to the globalization process of the world. And we definitely stick to that. We will not start another globalization or another agenda. And he said that. And he also basically announced to the world our tasks in support of the globalization. Now, 10 years from now, we will also look back. They will know that President Trump will be nobody, insignificant. He might be making a lot of noises today. Anyways, we're living in a very interesting time. We feel very confident about the future. Professor Li Yang. Now, we cannot be too oversimplistic about this. Now, market economy, in definition or in essence, is about globalization. Now, capitalism might be about globalization in some of the literatures of the West. But the globalization process has been disrupted by the First World War, the Second World War, and now the frictions today. So there are issues, if you will, about the world, the globalization. Now let's talk about World War II. Even before the end of the World War II, everybody was talking about the post-war reconstruction. And what was the theme of post-war reconstruction? Breakdown of the protectionism. Now, the United Nations, the WTO, the World Bank, and the IMF were created to break protectionism. So all these international mechanisms created was to promote globalization. Now, what's the problem today? Well, the mechanism, the institutions of the monetary system. Now, economy is globalized, but the monetary is still nationalized.
Well, yes. Are you referring to the U.S. dollar? That's not national. That's global. But most of the currencies and monetary policies are still domestic in nature. Yes, there are some challenges and difficulties, but those can be surmounted. In 2016, at Davos Forum, President Xi Jinping said that we could not attribute the problems to globalization, although there are some defects in globalization that should be rectified. Still, the messages hold true today. Since the ending of the Second World War, thanks to the Bretton Woods system, it kept running for over a decade, and the U.S. dollar kept going down. But after the collapse of the Bretton Woods system, we started having Bretton Woods II. Then the United States was not that duty-bound for the global economy. Well, but the system is still in place today, and I think the key issue of the U.S. economy is like this. It's too dependent on the global market, while the global market is too dependent on its currency, the U.S. dollar. That's the issue. And the Trump administration, after taking office, began to see this issue in a more acute way. They started to find some cure. And I think a unitary globalization has come to an end, replaced by plural globalization. President Xi Jinping made many interesting remarks. We do not challenge the existing institutions, for example. But he said that all roads lead to Rome today. He said in the morning, all roads lead to Rome. We are representing one of the roads, but there are other roads, and all those roads can contribute to co-governance in today's world, including monetary policies. Well, yes, and we have the former chairman of the U.S. Commodities Futures Trading Commission. Now he's running an insurance company. Jim, this morning, President Xi talked about the openness of China's financial market, especially insurance. I think it's good news for you. So, yeah, please come to China to set up a branch or an operation of your company.
Well, thank you for that invitation. Because I began my career as an academic economist, I want to come back to the theory you began with, that, you know, that global free trade is a good thing, is accepted, I think, by all serious economists today. But because something is good in the long run doesn't mean it's good to implement it at any speed. And some of the problems that have occurred with globalization are ones that are really only understandable in the context of a mature economy that's a democracy. Because a mature democracy may not embrace change rapidly. And if it doesn't, there'll be a rebellion against it. And so the fact that you get a greater output for everybody in the long run may not cause a mature democracy to endorse it as it's moving along and causing the disruption. The other problem that's fundamental to global free trade is that it works on the principle of comparative advantage. That is, each country begins to do more and more of what it's best at. So somebody may be best at low-cost manufacturing, somebody else at finance. If that happens in the extreme, then the one that's good at finance and the one that's good at manufacturing will both add to the total pie. Everybody in the world has a little more money, but the one that's good at finance will have only a few jobs, very high-paying jobs, big bonuses, lots of inequality. The one that's good at manufacturing will have lots of lower-paid jobs until someone even cheaper comes along. And so the fact that these things are good in theory and good in the long run, I think, is undisputed. You want globalization, you want free trade. But at what speed it can be absorbed and whether countries need to find balance within them for domestic reasons, I think is the key to what's going on now. And it's a process that is going to go on for a long time. The fact that there's hot rhetoric now is not as important as the fact that these are real issues.
Now, Zhu Ming,
what about Zhu Ming? I'm challenging you. Yes, in the case of the United States, if we talk about the structure of the U.S. economy, trade is not the only issue that it's confronted with. The low-paying jobs, the manufacturing jobs, have relocated to other countries. The United States, in its trade with other countries, is exporting high-end products like iPhone. The R&D is in the United States. The upper parts of the value chains are located in the United States. But that's good. But that said, well, for years, the United States has kept lowest unemployment rate in its history over the recent past. But for average income, like for the middle class, for 2 or 3 decades, there's been no rise. What's the root cause behind that? When they are moving up the ladder in the value chain, it does not help the low-paying jobs. Why? Oh, thank you. Thank you for this question. It's a question in point. And I think not only the United States, but also developed economies are confronted with the same challenge. With globalization, with openness in the global economy, emerging economies are moving up the ladder of the value chain. And in this process, developed economies need to climb even higher along the ladder. So the globalization has had some impact on the United States, partially in the form of a trade deficit. But today we're talking about the structure, the structural challenges of the U.S. economy. The trade deficit is caused by structural issues from the principles of economics. If you have too much consumption and too little saving, then you have to import from the other parts of the world to fill the gap. In the United States, consumption on credit is part of the culture. So a sustained deficit is the norm. Over the past 3 decades, the U.S. has always kept a deficit. For the next 3 decades, it will be here to stay. But how can we change it? How can we change it? Yes, you have the willingness, you have the determination, but the question is not about what, it's about how. How can you change this habit, for example, of low saving? Well, then we need to go up to even more higher-end industries. But over the past 15 years, there's been another structural issue. There's been a refocusing of the economy towards services, especially general services. The percentage of services in the U.S. economy stays high, and 10 years after the outbreak of the financial crisis, over 89% of the newly added jobs are in services, and general services like the catering industries, restaurants, schools, and hospitals, instead of very high-end service jobs. And the service industry inherently has lower productivity, and that has an impact on the redistribution of income as well. That's a structural issue. We would say that the U.S. is strong at services, but they are good at general services. And for high-end manufacturing, it is not industrialized enough in terms of a scale. For example, U.S. is accounting for 16.8% in the high-tech products market in China, but the import market. But in 2016, it was only 8%. And Japan, Korea, and Taiwan took the place of the United States, which means in high-end manufacturing, the competitiveness of the United States is decreasing, despite countless inventions and IPs and technology innovations. The United States finds it very hard to scale it out, to scale it up. It doesn't have the scale. For high-end manufacturing, it's not working. They have to deploy a lot of general services, resulting in a massive reduction of productivity. In the 1990s, there was an annual 1% growth rate in productivity. From 2000 to 2007, 1.5% every year. From 2008 to today, every year the productivity grows only by 0.5%. Without notable growth in productivity, you cannot grow the pie big enough. You have nothing to, or you have very little to distribute. Hence, the income gaps, the disparity in the society, inequality. Without addressing those issues, you cannot address the trade issue. Zhu Ming raised 2 critical issues, and there are cures to those 2 issues. Over the years, scholars in the United States have come up with many good ideas. For example, household saving is too low, while business saving is good. And then economists have come up with a proved idea that when every U.S. employee gets his salary, 10% of it will be automatically deducted into the form of savings. There will be mandatory savings by each and every worker or income earner. For the first week of the month, you can go to the company to fill up a form saying that I don't want to join that program, give all the money to me. But according to an experiment survey, most Americans would forget about it. Well, just take 10% away as savings. The suggestion is from the Chicago boys, the Chicago school economist. When Bernanke became the Fed chairman, one Chicago University professor, or the Chicago School of Economics professor, raised the idea at one of the congressional hearings. It is an idea from the liberal camp, not from Harvard. And yeah, the second issue is about productivity. Because the high school education is decoupled from university education, there's no vocational education. Yes, the university enrollment rate is very high, but the dropout rate is very high, as high as 25%. But Bill Gates is one of them, right? And Steve Jobs and Zuckerberg. Right? They are dropouts from universities, but most of those dropouts do not succeed in their later career. If you want to work, it takes skills and education. So those are the areas of potential reforms. And the Trump administration is carrying out some policies such as smaller government and less intervention. That runs counter to what is needed by the United States. There should be more intervention so as to address those structural issues to make it more competitive.
Now we're in more depth now. This question definitely deserves a more in-depth discussion. I will be more specific. Now, labor productivity decline is a worldwide issue and phenomenon. And the first Business Institute actually issued a report saying that China's productivity is actually declining faster than that of the U.S. So this is not a U.S.-specific factor. And then the share of services increasing. China has been increasing its share of services, and but the productivity in China is actually lower than that of the U.S. in terms of the service industry. So the deceleration is actually, it should be structural. That's why the overall productivity is declining. So anyway, this is not a U.S.-specific issue. The same thing happens in Europe, and economists have been saying that we need to increase the share of the service industries as a percentage of the overall economy. Everybody has been saying that every year. So again, this is not a U.S.-specific issue. But consumption accounts for a part of the U.S. economy, but low savings rates. These two have been persistent in the U.S. economy. All the other advanced countries, Japan, only second to China, so all have a higher savings rate than the U.S., which also has a high consumption rate. So basically, everybody has to finance the U.S. consumption. So the cheapest place is actually in the U.S. in terms of consumption. Everybody wants the U.S. dollars ever since the end of the World War II. Everybody wants. Everybody likes the U.S. dollars. So basically, the U.S. has been spoiled because of this craving for the U.S. dollars. So basically, this is a common issue. And then demographics is the last issue. The U.S. is also aging. So employment, the decline of the jobless rate in the U.S. is actually doesn't cover the entire picture because of the shrinking labor force and the decline of participation, labor participation in the U.S. So low savings, high consumption, definitely the top issues of the U.S. economy. Now, Zhu Ming. Now, I respect Li Yang. I always debate with him. I always debate him, so I have to do that again today. He challenges me. That's a good thing. Now, service industry in China is actually nothing. And while the U.S. is actually it's increase of shares of as a percent of the overall economy is nothing to the China's increase of shares of service industry, because China basically increased from 0 to 50%, but in the U.S. it was already 80%. Everything was actually socialized. So basically, the service industry is highly sophisticated and advanced in the U.S. And Germany has a different story. There is the service of the industries in the Germany. Let's listen to the two American friends.
me jump in here because.
Oh, yeah. Why don't you do it? No,
first of all, we started globalization, and now we're talking about structural reform in the United States, and we're missing some very key components. First of all, one of the biggest challenges we face in the United States is reforming our entitlement system. It's the biggest part of the federal budget. We haven't even mentioned that. It is a huge component of whether or not we're going to sustain growth rates into the foreseeable future at 2.5%, 3%, or whether we're going to see something far less. The overwhelming part of our budget is entitlements. If we don't reform the entitlement system in our country, then our debt will continue to rise. So first and foremost, we got to deal with that issue. Second, and the politicians are not prepared to deal with that issue. Social Security. Well, no, I mean, the problem is our politicians are not prepared to deal with the reality of talking to the American public about entitlement reform because it's political suicide. But it's necessary in order to strengthen our economy and to deal with the debt, the rising debt dynamic. Second point is we have a surplus in agriculture and services. That is not the weak part of our economy. Why President Trump is so adamant in redefining trade relationships is he feels that the United States has let our manufacturing go overseas. And he would like to bring some of that back into the United States. That's not only driving the trade rhetoric, but it's also driving the reason we have deregulated our economy in the last year and right-sized, I would say, our economy on regulation, and why we had tax reform. And so in that area, it's not clear where we're going to head because there's a new competitive environment, and not all manufacturing is going to come back to the United States because supply chains don't work that way, right? Not all the manufacturing going into Mexico or into other low labor cost areas or into southern China is going to come back to the United States because China's economy has grown. There is a domestic economy here that is attractive for U.S. manufacturers as it is for other global manufacturers. But what we can do is strengthen our vocational system. Not everyone needs to get a 4-year degree. We need to change the way we think. By the way, it's not unique to the United States. Germany is a model in some respects. We need to think about the way that people go through the education system. The idea of getting a bachelor or liberal arts degree for 4 years in a U.S. college and then going off and getting a great engineer job is not going to happen. We have seen a shrinkage in our engineer base and investment in math and other skills that are necessary for the 21st century industrial age. And we're going through a fourth industrial revolution, which is critical. It's not unique to the United States. Jim would probably say we're not unique. But in order to prepare for that, the United States has to change course a little bit.
So,
I think all of you would acknowledge that. You want to pick up on that, go ahead.
well, I don't want to interrupt you if you want to finish. But
You
what I
can freely jump in.
Yes.
okay,
This is,
then what I do want to
discussion.
say is I think we all agree on issues like vocational education.
Yeah.
We all agree that more money has to be put aside for savings, pensions for people in our kind of economy. I think we probably all agree on that. Where I might disagree with some of what I've heard, not necessarily so much here, but throughout the forum,
Why don't
is
you,
the
put
trade.
close to the mic.
Oh, sure. I don't really think our trade deficit is a huge problem. It's talked about now as though it's crippling the economy. We have a very healthy economy. I am much more worried about our budget deficit than I am about our trade deficit.
That's what I was getting at.
And yeah, I wasn't sure whether we're agreeing or disagreeing.
Yes.
But
Politically, trade deficits are important.
Yes.
But from a standpoint of our economy and the foundation of our economy, the budget deficit's much more important.
Enormously more important. And so the only place we might disagree is you want to handle it with entitlement reform, which I agree is inevitable. But I'm not particularly fond of what the Congress has done recently to increase the deficit. In the last 12 months, 2 massive deficit-increasing bills have been passed, and we will soon be one of the very few developed countries in the world who have bigger national debt than GDP. And I don't think that's a good position to be in. We've made it inevitable now, and we'll regret it.
Okay.
Well, let's redirect our conversation, all right? So, because right now, basically, 2 Americans are fighting and the 3 Chinese are fighting among themselves. Now,
oh, okay. Yeah. Now I want the Chinese fighting with the Americans. I mean,
now, why we're talking about structural problems? Why Trump was voted to be the president of the U.S.? Populism in the U.S. has been on the rise. Also in Europe. Now, one reason, if I may argue, the U.S. used to be a middle-class, strong society, like a bell-shaped, oval shape, but today is a A-shaped, like pyramid-shaped society. Well, China actually has the same problems. Maybe 10% of the population own 80% of the wealth. So the blue collars are dissatisfied, saying that for decades their income hasn't increased, and the low-end manufacturing have been relocated overseas to mostly China and Southeast Asia. And Zhu Min just said that the move up along the value chain doesn't address the problems of the low-end population. So President Trump basically wants to use China to have himself elected, and now again, so the trade friction and the redistribution of income, how come now it's a pyramid-shaped society? To Mr. Zhu Min. Now, before I answer that question, I want to go back to Julie. The problem between trade deficit versus fiscal budget deficit. They're actually connected, interconnected. He said that he cares more about the budget deficit. Well, it's easy for you to say because you issue the U.S. dollars. You can basically print U.S. dollars to maintain your deficit of trade, but that's not sustainable. Now, RMB is already in the basket of SDR. So U.S. dollar is no longer the sole world currency. And then the exchange rate of the U.S. dollar will affect the time value and then the ability to finance your trade surplus. So none of these can be sustained, trade deficit or budget deficit. But they've been sustained for decades. Yes. But what is different today is, after decades of that phenomenon, well, let me take one step back. China has become the second largest economy now, and the contribution to the world economy in absolute terms and in the growth rate has been surpassing that of the U.S. And now the world economy has become increasingly pluralistic. So that's the entire landscape has changed. And secondly, how come the middle class has been disappearing from the society? Well, basically they're moving down. The wage as a percentage of the GDP is declining. Why is that happening? Especially in the U.S., very serious. 6 percentage points decline, wage as a percentage of the GDP. Why? Because the decline of productivity as well as the extension of the service industry. That's why the wage is not abreast with the growth of the economy. The financial market is growing way ahead of that the real economy. So 1% of the people are earning most of the money. So 1% and 10% of the population actually earning a lot more money than the rest of the people. So not the real economy is benefiting as a result.
I think you could, in some parts of your articulation, be the economist for Trump, and in other areas, not. Let me just say that I think it's fair to say that the tax package, and Jim was alluding to this, the tax bill was not perfect. And I'd be the first one to acknowledge it was not a perfect bill. We were never going to have a perfect bill. That said, but the notion of dropping corporate tax rates to be more competitive with OECD averages was premised on investment by companies, both in terms of increasing investment in the U.S., but also investment in the workforce by improving wages. And you've seen some early signals that companies have used the tax reform to raise wages, to provide bonuses. The question is it sustainable? And there's a big question mark in that regard. It may not be sustainable. It may be a short-term hit, but not a long-term trend. But if you follow through on the premise behind the tax reform, then what you really are saying is that the dollars that are going to be freed up by companies can be invested in R&D, can be invested in manufacturing in our country. That will create a series of impacts that over time will strengthen our economy and wage. And that would be the argument that the Trump administration would make and the Congress would make with why they passed this tax bill.
But on the contrary, when there's more cash flow for the corporate sector, they can buy back their shares so that it will push up the equity market without investing in more R&D. We have seen that during the Reagan era, and we're going to see a repetition of that. Adding the cash flow thanks to tax cuts will be used for share buyback. Ultimately, we're going to have a debate between China and the United States. I'm supportive of Zhu Ming. Professor Zhu Ming, the corporate sector in the United States has $2 trillion of cash. If you cut tax, it will not give rise to more investments. If they are cash-strapped, then a tax cut will be equated with more investment, but that's not the case. Well then, please take note of the question. How can blue-collar works increase their income? Otherwise, there will be more and more populism in the United States. That's the question. It will dissuade the United States away from globalization. But the ultimate answer needs to be sought and pursued by the Americans themselves. Yeah, we are eager, we are anxious, but we cannot solve the problem for them. In the process of globalization, for developed economies, they have to run faster. They have to invent new technologies. They have to upgrade their structures of the economy. They need to equip their workers with more skills. It calls for broader social reforms like training, retraining, education, but post-Reaganism, the overall trend has, or since the beginning of Reaganism, the U.S. government is shrinking. In all the developed economies, the U.S. has the smallest government. And over the past 3 decades, it has kept shrinking. With Trump, it will become even smaller. And Trump is countering the trends of the history. Rather, the United States should expand investment in social undertakings like entitlements, not in entitlements, but some social undertakings like education, training, so that such as vocational training. There are 2 parts of the entitlements. One for pension, retirement. That should be kept, right? The same entitlement should be sustained. But what can be cut? The protection for the disability insurance can be reduced. For example, I can go to the government saying that once a week I feel depressed. Then with prescription, I can refuse to work, while the government will pay me a lot all the time. And I can say that I'm addicted to alcohol. I cannot work because I'm addicted to alcohol. Then the government will protect me from having less money. The government will keep me rich. Well, then, yeah, those policies sound a little bit far-fetched. But even when you do away with those policies, can you solve the problems given the magnitude of it? I don't think so. Those are trivial issues, right? Let me redirect our discussion. Shall we stop saying we should do this? Shall we stop saying should? Yes.
咱们去想一想，就是美国的政策，由于现在目前的这种状况。
Then talking about the current state of affairs of the U.S. policies, what's the likely direction that the U.S. policies will take? All the issues we've talked about are not short-term issues. They are not short-term fixes. But precisely those issues will determine the future direction of U.S. politics and economic policy. So let's make a wild guess at what's going to be the policy direction. Populism is here to stay. The objection, policy-wise, the objection to globalization is here to stay. Then let's try to guess and predict the next course of action in terms of U.S. policies. Let's do that. Given the current economic structures, what are going to be the direction of the policies? Zhu Ming.
I'll give you an answer in this way. If you look out the next 2 years, don't forget we have a midterm election in the United States in November of this year. Not much gets accomplished in a contentious environment. There are 3 or 4, I would say, policy priorities for the next 2 years. And one is to put in order our trade policy. And here, NAFTA, the North America Free Trade Agreement negotiations are ongoing. We'll know in the next few weeks whether or not the administration is able to reach a deal with Mexico and Canada, or whether it becomes a 219 issue. Second is we need to come to some kind of deal, grand deal, bargain with China, because the failure for the United States and China to reach some understanding has global ramifications, not just ramifications for China and the United States.
So, Marin, do you think Mr. Xi...
Hold on, I'm not finished. Trade policy is one area. Second, the United States needs to put its immigration policies in place. That's hugely important. We haven't really hit it hard today, but talent is where we're all going to compete. We've talked about investing in vocational training and in education, but we compete for people to come to our country and study there and develop enterprise. Small businesses become big enterprises. And we're going to compete for talent. We also have an issue with those who are in our country who are working in the workforce who also need to have rights, citizenship. So immigration's a big issue. Clearly the president has been speaking out. Third, infrastructure. The physical infrastructure in the United States, ports, roads, you name it, has to be vastly improved. Look what's going on in China. We don't have high-speed trains between major cities. We have not shortened the transportation between one hub and the next.
So where the money comes from?
This gets back to something Ju-Min and others spoke about. Are we going to put another $1.5 trillion on our deficit? Jim would speak to this as well. I would simply say to you, we're going to have to find a way to pay for it.
Yeah.
Because infrastructure creates jobs, so there's something there for the workforce. But we, by the way, have a lack of construction workers in our country. We're talking about high-end jobs. We also don't have construction workers that we need in order to fulfill the mandate to do infrastructure. We favored a gasoline tax. Why not add 25 cents or 30 cents to gas? Gas prices are pretty low in our country. So there are a lot of big issues the United States is grappling with, as is China and other economies. And the question is, can we, in this political environment in our country, get these issues done? If we can put immigration policies in the right place, if we can put forward a more pro-growth, job-oriented trade agenda, if we can manage through infrastructure, then we can get on to these longer-term issues about entitlement reform. But we.
So you asked for predictions. In general, I'm optimistic about the U.S. economy. We continue to be a very innovative place, and our culture makes it possible for people to challenge, always to challenge.
I agree.
And out of challenge comes a lot of innovation. That's a tremendous advantage, a cultural advantage. Very hard for anyone to say, let's just do that. And so that's on the positive side. Now, to make a few predictions that are a little less optimistic, I don't see us getting the money for the infrastructure we need. I think it's enormously important, but I think it's unlikely that we will find a way to finance it any time in the future. I would add that another thing on the negative side is that we have made inequality, which is inevitable as a growing phenomenon in a knowledge economy, but we've made it worse. This tax bill had some good aspects and some bad ones, but one of the things it did is to reward enormously the owners of corporate shares. I'm one of those people. I got a big reward for this, but that doesn't help our inequality problem at all. We're the people who in that sense need it least, and I would add that's going to be a huge problem here in China as well. I
think the income gap is going to be even bigger problem in China than in the United States.
Yeah, 你来回应一下。
Ju-Min, please make a few responses. I'm not so optimistic about the prospects of the U.S. economy, both in the short term and in the long term. This year, there's robust growth, no question about it. Because of the tax reform from Trump administration, it will add 2% to the magnitude of the fiscal stimulus is about 2%. Together with easy monetary policy, there's going to be a one-off effect. It is a double easy. It's an easy monetary policy plus a proactive fiscal policy. And the inflation will not pick up for some time. So robust growth is certain this year. But after robust growth this year, what about sustainability next year and the next years? There's a lot of uncertainties around that. And second, what about the financial markets in the United States? There are a lot of risks. The equity market is way high. It's a new historical high, far higher than the index prior to the crisis. And the PE is very high. Price-earning ratio used to be 18, but now it's above 30. The price-earning ratio is above 30. But the corporate profitability growth is far behind the PE growth. And what about the bond market? It's also at a historical high, and the interest rates are being hiked. So the only direction for equity and bond market to take is to go down. Yes, in the short run, the rally will continue, but in the midterm, it will be reversed. And you can see that with the news about the potential trade war, there's been a massive drop in the index, which means the confidence in the market is quite fragile. Please switch on the mic. Secondly, in the long term, the foundation for populism is well established due to issues like inequality and the fiscal budget deficit and the sense of insecurity hosted by the middle class. So the most urgent task for the United States is to carry out supply-side reforms. Instead of resorting to a liberal monetary policy to boost aggregate demand. Yes, China is carrying out a supply-side reform. Are those two reforms the same or similar? Well, maybe in some senses similar, like China is reforming its industrial structures and capacity. In the United States, there's also overcapacity in some sectors, like China. For example, we've talked a lot about education. We've got to improve education, reform education. We need to improve the pension schemes. Those reforms will boost the confidence in the future. With that confidence in place, there will be more investments. If you fight a trade war, then confidence will dwindle. There will be less corporate investment and casting some doubt on the future prospects of the U.S. economic growth. We sincerely hope that the United States will become stronger. We sincerely hope that in the midterm, there will be no major issue with the U.S. dollar. If there is a crisis with the U.S. dollar, both the Chinese economy and the rest of the world economy will suffer from it. And that said, with that keynote, in that backdrop, I still have confidence that in the foreseeable future, there might be a major opportunity for a positive change in the United States. So far, Trump administration is exerting a lot less damage to us than the divisions he has caused in the American society. I think all of you, our American friends, should agree with me on that, right?
Now, one specific example, Harvard University has a group of young alumni who have their Facebook group. They actually had a fight at South Carolina campus. Fist fight, group fight, big rout. The Harvard alumni said that why, for a long time we had such a fist fight, so let's just set a date and have another fist fight like this, because it was really thrilling to have such a fist fight. I didn't make that up, all right? So Trump's rise to presidency basically fragmentized the society and basically just instigated that kind of negativity among the population. Well, I stand corrected. After Donald Trump, a true leader will come who have the calling power, the ability to of cohesion, and of course supply-side structural reform has been repeated and has been discussed for decades. What we need in the U.S. is like what is said in the book of who we are, who are we, so that the U.S. can go back to the true self. Now, I'd love to hear the challenge from the U.S. friends. Microphone, please.
I admire David very much. David Lee is very thoughtful in many respects. But I'm going to argue that Trump exploited fragmentation in our society. He hasn't created it. It existed. The populism that we're talking about, the challenges in our society, pre-existed Trump's rise to presidency. He exploited it effectively in his messaging to become president of the United States, but those tensions were already in society. So that's point one. Second, Winston Churchill had the great line, and his line was, I believe in the Americans, but only after they exhaust all other options. So my point would be back to Jim. I think Jim is right. We are a very innovative country. We continue to drive innovation worldwide. I think China is beginning to become much more innovative in its own right. But the United States is the most innovative country. More breakthrough technologies take place in the United States. Now, China's catching up. There are other countries that contribute, in Europe and Israel and places like that. And because of that innovation, I have faith and confidence that despite all of our political challenges, despite all the structural issues that Ju Min is highlighting, despite our own recognition that we have a budget deficit that is not sustainable over a long time, Jim and I would both agree, we also have resiliency in our economy. And the idea that our economy is going to collapse is just, we're not Europe. We're not going to have it collapse. We may have slower growth than we want, but we are going to have growth in our economy because it's not driven by the policies in Washington. It's driven by the fundamentals in corporate America. And that doesn't mean we don't have issues to resolve, because we do have an income gap.
Only thing, you have to educate your broader population. The U.S. economy cannot depend on the 3 dropouts, the talent, the genius. You need to educate the single mothers, the dropouts. That is the fundamental social problems yet to be addressed by the U.S. government. Otherwise, the social cohesion and everything else cannot be addressed. Alrighty, then let's open the floor for questions. And the international friend sitting in the back.
I would like to address one question to Mr. Brilliant. I am represent one logistic company, Italian, with many offices in USA. I would like to ask, how is possible to talk about the duty in the steel when this steel you need to build the car? So finally this car will cost more. Second question, how, okay, the innovation. So I agree with David, the innovation, but all the manufacture sector is very old. How you can produce the steel with such kind of equipment?
他的问题又回到咱们争论的这个啊，就是高科技解决不了这个低端人。
So basically, high tech cannot address the low-end population's problems. So coming back to our old questions, a problem about the blue-collar class. Now, 3 things. U.S. society is very complicated. No simplistic solution. While hearing your discussions and debate, seems like the U.S. is not even as good as China. That's not true. Now, education and everything else is very important. And secondly, post World War II, the twin deficit has been ongoing. Now, twin deficit is actually necessary for the world's economy to operate normally, as long as it's within a normal range or reasonable range. Thirdly, actually, U.S. has given a solution. 70 years post-World War II, twin deficits and inflation, this and that, but under Reagan and then Clinton, no longer twin deficits. How did they make that happen? What measure did they take to dissipate the twin deficits? Clinton administration didn't resort to a trade war. They look back and they set their own housing order, including the different corporate system and pension system and everything, and the unions. That question is really too small to be talked about here on this occasion. They definitely need to look back into their own self, because that's what happened. Now, basically, if we look very carefully, deep into their experience, we can find the solution.
First of all, I used to represent the steel industry in the United States, so I know something about the industry. We do not favor managed trade, period. We do not favor managed trade solutions. We don't favor it from the United States. We don't favor it from China. We don't favor it from any country. So we do not support the use of quotas in trade. We didn't support the use of quotas in the agreement that the United States and South Korea just reached, nor do we support it in the context of the Steel 232 actions. Managed trade does not work for the global economy, period. Second, we would say to you and others, we fully understand that the consumers of steel in the United States, the auto industry and others, benefit from a competitive environment where prices are low. But three, this is where China plays into this role. Excess capacity in areas like steel, cement, and aluminum are real issues. If you're going to flood the market, you're going to have these kinds of reactions from governments, not just in the United States, but out Europe and elsewhere, because what you have done is you flooded the market so high, you have dropped prices so low, it's not competitive for countries to continue to have manufacturing in areas that they've historically had it, which means dislocation of workers. That's why we had the trade dispute.
OK， 下一个问题啊，好，这位啊，女士，
Next question. This lady here, please. No. Zhu Min, the fragility of the U.S. economy. Will this lead to another financial economy again? Because this year is the 10-year anniversary of the global financial crisis. So some economists have such worry. Very fierce, provocative question. Now, the financial market and the system of the U.S. is the biggest of the world, and definitely any turmoil in the U.S. financial market will definitely lead to the turmoil of the world. Well, this today is different from 2007 and 2008. Number one, the total debt was 72 trillion. Today is 130 trillion U.S. dollars. We see no such thing happen in history post-financial crisis of the increase of debt. Basically, the debt doubled, so the leverage level has been increasing. Hence, the aggregation or increase of risks. And secondly, another big difference from 2008. Well, in 2008, liquidity risks were really high. However, the macroeconomic side has a lot of room. 70% of the debt rate, and then there was also the interest rate room. But today we have no such room. And today, the debt as a percentage of the GDP is 110, and the interest rate was near zero. So if there's any prospect or potential of financial crisis, the government today would not be able to bail out the economy as they did in 2008 because they had no room. So if any big turmoil, that would be disastrous. And the only source of big turmoil would be from the U.S. financial market because the risks, including the PE ratio and the debt as a percentage of GDP, are peaking at the record high. The ninth percentile is already, we are already there, and Donald Trump's policies have been extending all these really risky levels. And the U.S. is at record high. The interest rate can only go high. So in this process, if a prudent and transparent operation is instituted, if the policy can match the macroeconomic condition, the U.S. can engineer a successful, safe transition. But if there's any misreading of the market or the mismatch between the expectations of the market versus the economy, and then big turmoil would be possible. Once again, I'm not saying that this will happen this year. I believe this year there will be turmoil, but no collapse. But 3 to 4 years is a high probability event that big turmoil.
The final question. We're running out of time.
Thank you. This is Irene from the Media Group, and I have a question to Mr. Myron Brilliant. It seems that the U.S. company is facing a very embarrassing situation after Mr. President Xi's keynote speech this morning. On the one hand, President Donald Trump is really reluctant to trade with China, and on the other hand, China is trying to attract and embrace U.S. companies by lowering the import tariffs and further opening up the financial market in China, especially insurance and other financial markets. So for U.S. companies to come to China is a question or not, to ignore Donald Trump or not.
Oh, yeah. How to ignore, yes.
I don't, first of all, I think U.S. companies will come to China because the market is attractive as a general proposition. It's growing in significance, and there's not a major U.S. company that doesn't have China as a component of their overall strategy. I would say to you that what we heard today was a very good speech from President Xi Jinping, but it lacked specificity. And what you're going to hear from the U.S. press and from the U.S. government is what's in the details behind the 4 major areas that were outlined by the President today. He talked about market access in services and in manufacturing, but what does that mean? We heard in November, for example, Liu He and others talk about insurance, banking, and securities, but we didn't hear that it would be done overnight. We heard it would be done in 3 years. We didn't know exactly what it meant in terms of the equity caps. We didn't know the extent to which this liberalization would happen. and we didn't hear about electronic payments. I won't go through all the issues. The point is, you have 4 categories that were discussed, right? You had market access, you had investment, you had intellectual property, and you had imports. If all those things are matched by specific details and a timeline that is immediate, you heard him say sooner rather than later, then I think it would go a long way to diffusing some of the tensions that exist in the U.S.-China relationship today. U.S. companies, though, are attracted by this market, and they're not going to be determined by President Trump's policies. They're going to make their own decisions based on the attractiveness of this market. Be assured of that.
Yes, let me add a point. Within the next 2 years, there will be a major financial turmoil or meltdown. Well, within the next couple of years, it is inevitable that there will be a major correction in the market, but I don't think within the next 2 years there will be a repetition of the bankruptcy of the Lehman Brothers and the global financial crisis triggered by that. The reason is simple, because the entire world still believes in one thing, the US dollars. And in case there is a global turmoil like that of the 2008, there will be another round of QE, and the entire world will buy into that. But the policy maneuverability is not there, right? But then Fed is believed in by the entire world. Fed has the confidence of the entire world. Maybe in 20 years' time, if U.S. stays in the current policies, then there will be another crisis. There will be a huge crisis, a very big crisis. I hope our U.S. friends will help push forward those reforms so that U.S. dollar will be able to achieve soft landing instead of crisis involving the dollar 20 years later. Good. We have had a very, very heated discussion and debate talking about the structural issues of the U.S. economy. Due to time constraint, we have to wrap it up. And a round of applause for all our panelists for their excellent, wonderful comments. Thank you all for your participation.